Alright, so in this video, I'm going to discuss about the lunch session long that I've traded on May 8th, 2025 between the macro of 1050 to 1110. So the model that I've utilized for this trade is my own, not my own model, but it is one that I have been using for a very long time and that I have been studying for a very long time. And it is based off trading off the weekly bias narrative, the daily bias narrative according to the weekly bias narrative, and then within the intraday trading, the model is based on capitalizing upon the previous session highs and lows. So if I identify the fact that the AM session has been creating the daily manipulation, which in a bullish case is the low of the day or to the downside, then what I do is I wait for the 1050, 1110 or 1150 to 1210 to take said liquidity pool, and after it does so, I'm going to aim for the opposite. So, based on the fact that I was looking forward for the weekly target of 20,340.4, the March week 4 buy sell liquidity pool, as you can see, I use the same mindset for my weekly chart and my daily chart and everything because all of the concepts work on every singular time frame. So based on the fact that that was the drawn liquidity, that was my weekly target that I'm still aiming for, I understood the fact that the market has shifted here. The market returned back into this busy, closed above the 75%, closed above it eventually, market opens. Based on the fact that we were awaiting for the FOMC news on Wednesday, was anticipating based on the weekly chart for the low of the week to be created on Wednesday, for the market to make the low of the week on Wednesday at FOMC or before it. So therefore, I would not trade Monday, Tuesday, and I would head on into Wednesday, Thursday, and Friday. So Wednesday after FOMC, that is the time, that is the when in which I trade. So it could be Thursday or Friday. The direction, as I've stated, will be to the upside, and the narrative would be the fact that we would create the low of the week again on Wednesday. So once the market goes back into the 75% of this inversion fair value gap on a daily chart, based on the fact that we did not even reach the constant encroachment of this inversion gap, that tells me the fact that the market is going to want to go higher with speed. In the same time, we're trading in very close proximity to this buy sell liquidity pool, and to be more direct, we're trading at the 75% of the implied leading range. And the reason why that is implied is because we have a low here, which is now inside of the chart. So this high, this range is right now unmaterialized. So therefore, that is why it's implied. But if this is my target and we're trading very close proximity to it, this means that I do not wait for, or I do not expect the fact that the market is going to do big retracement. And I anticipate the market to go higher with speed from the point in which we start trading on Sunday. So market opens, goes back into the busy, creating the low of the week. And based on the fact that, again, I was not awaiting for big retracement to create the low of the week. And at the same time, based on the fact that we did not even touch the constant encroachment of this inversion gap, which is based off the properties of an inversion gap, I was expecting for Thursday trading to open, to never go back below this low, which means that the low of the day might be created in close proximity to this tail or at the 25% of this future order block, because this order block, in order for it to be created, we need the market to go above it, not close above it, but only go above it. So if I understand the fact that the market's going to go here for the sake of this order block creation. Then once we close above the 25%, that can be used as a means of support, and also the 50% and 75%. So for the low of the day, I anticipated the market to use this 25% as a means of support to send us higher into this buy side, and eventually this as a weekly target. Based on that premise, seeing the fact that the market opened on the 8th here, went higher throughout London, lower inside of the AM session, taking on this level of sell side and this level of sell side, based on the fact that I did not want to see the market go back below this low, market goes back into the order block, 75%, fails to reach the 50% higher. This would be categorized as a balanced price range. Of course, we have this new day opening gap, but this makes me realize the fact that once we went away from the daily inversion gap, then there's no reason for the market to go back into it. So this means that this low would be left intact, and this is the only level sell side that will be taken in this one as well. So the PDRA of choice instead of the 15-minute chart would be this busy. Once the market goes back into it and below the AM session sell side, that is when I go into the 1-minute chart and I seek the opposing buy side liquidity pool. And of course, this is a very obvious liquidity pool to aim for, the London session highs. But because I want to be content with the targets, with high probability targets, I only aimed for this really, or even this only. This would be a high probability target because it stands at the equilibrium or even in a premium. And this was my 15-minute basis. So once the market goes back into this, I switch to a 1-minute chart and I wait patiently for my 10:50, 11:10 macro market structure shift to the upside because of the daily bias and because of everything that I've discussed within this chart. So within the 1-minute chart, based on the 15-minute narrative, this is the AM session buy side liquidity. The market took on the AM session lows, the sell side here. So therefore, for the lunch, I'm waiting for the AM session buy side to be taken, the opposing to this. This again would be a very high probability target for me to exit on, but I choose the targets for my trading to be, even if this is high probability, I want to see the market, or for my trade, I want to see the market only go into this, and I'm content with quote unquote missing out on the profits because I am training myself to elevate slowly within slow targets, so this, or small target, so this, I would be content with this. So market goes back into the busy, forms a swing low here, goes higher, lower, closing above the 50%, opens with a volume imbalance, goes back into it, closes above the busy, which tells me the fact that the market might be ready for this to become a balanced busy on a 15-minute chart. So what I utilized to enter here was this inversion gap, and the reason why I longed it before the market closed above it is because I was anticipating, based off my studies, that this would be left intact. So once the market goes above it, it will never retouch it. So based on the experience that I have studying this model over and over again, I understood the fact that the market might want to never return back into that. So I entered prematurely on the basis of the fact that the market would not come back into it. My stop loss was below the 25% of this order block, so below, not at, and in the same time, based on my 50-minute basis of this being a balanced busy, because we went back into it, we made it efficient, and now we've left it, making it balanced, or we are starting to making it balanced. based on the fact that we are trading within the 1050 to 1110, and based on the fact that I was waiting for this market structure shift here, and my model states that I'm going to take a trade prior to the 1050 1110 macro market structure shift. And the reason being is because I try to evolve into taking these trades here. So the sell stops run, this is what I evolve into. Currently I'm at the inversion gap entry. So I long here, stop is below the constant encroachment of this. So not at the constant encroachment, but below the constant encroachment. And what I wanted to see was the market to go back into the high or 25% of this BISI to never return back into that constant encroachment of the 15-minute BISI, highlighted in blue. And I was aiming for this, and you're going to see me aim for this as well, but I will lower my target because, again, I want to be content with it. Market goes back to the volume balance, and inside of the constant encroachment of this BISI, and the reason, again, why I placed my stop below the constant encroachment is because I allow the market to go back into the constant encroachment, but I don't want to see it close below the constant encroachment. So the probability of the market going back into the constant encroachment is probable. The market can go back into it, but I do not want to see it trespass it through closing below it. So once the market goes back into it and then closes above the BISI, this tells me that the market might be ready to start expanding higher into the quote-unquote algorithmic phase. This is how I name them. They're just part of ICT's core content. So the reversal profile, if that is the correct name, based on the fact that I'm awaiting the market to reverse from this key level, this is the level of sell side, which will be taken because we pair reversals with liquidity pools, and this would be the next reversal point, and this would be the start of the expansion. So market closes above it, forms a swing low here, goes above the inversion gap, this small one. And what I did is I added another entry here instead of this auto block, based on the fact that I was waiting for the market to close above this inversion gap, go back into it, and then start rejecting higher. Stop loss in the same place, targeting here, and eventually you're going to see me have one contract here and the full profits here initially. Market goes back to the constant encroachment of this BISI. We leave it here, never touching the stop loss. We're very close proximity to it, but we never do because it is placed below the constant encroachment of that BISI. Market closed above the 0.5 12-month Fulcrum standard deviation. We go back into it using it as a means of support. Same thing with this inversion gap. 25 or 75% of this 1 minute candlestick, which would form because we are inside of the 25% of the implied dealing range. So from this to this, or from this to this is the lower portion of the implied dealing range, and this is where a breakaway gap forms. So if I see this being left open, then this is a signature of speed or strength of the narrative. And this would be the signature that the market will leave this intact or leave it open. So this would be constituted as a market structure shift. And after the market takes on this high, then I would not want to see the market go back into this range. And if it does so, I would be willing to take a loss because I was wrong within my narrative. Market leaves this open, goes higher, market structure shift within the macro. Here, closes above the 50% of this, uses it as a means of support, goes back into the 75% of it. Auto block here, higher, closes above it, never retouches this again. As I've stated here, this was the signature that I entered based upon. Auto block, higher, shift, breakaway gap from here to here, 50% of the implied dealing range, 75% of the implied dealing range, which would mean that the market would not expand or would not retrace lower with speed. So I would want to see the market expand higher with speed. Higher, higher, constant encouragement of this wick, goes above it, inversion gap here, uses it as a means of support, goes back, immediate rebalance, which would mean that the next 2 to 3 candlesticks should expand higher with speed. Market does so. I am out within my partial profit. I adjusted my partial profit here, or my final profit here, goes back into this, another breakaway gap, higher, auto block, and then eventually this level of buy set is being taken. And this one would be the one that I would aim for. And you're going to see, if you're looking at your charts, that this was materialized, yet I'm content with the results of this trade. So if you want more insight into how I do these things, make sure to join my free channel, which is in the description below. And for those of you who stuck upon this moment, I want to tell you something real quick. If you hear somewhat of my voice being, I don't know, disturbed, is because within this past few months or this past year, I've been going through tremendous amount of stress, tremendous amounts of pain, mental or physical pain or whatever you want to call it. But I would want you to take this and take my pain and understand the fact that within this pain and within this stress, based on the fact that I trade, based on rules that I've created when I was in a lucid state and in my proactive state, I want you to understand the fact that even when these storms come, the rules are respected. So I don't know in which place you are in terms of your life. I don't know what's happening within your life. But based on the fact that I document these for the purpose of documentation, I want you to understand the fact that rules based on the best absolute actions, regardless of how we feel, are the best things to have in place. Because the emotions might fluctuate, but the rules, if they're respected, they stay the same regardless of the storm that happens within your life. This was Stoyan. I hope you enjoyed this one. I hope you gained value from this one. And I'll see you in the next one.